struggling with a tax bill you can't afford to pay, an offer in compromise is an agreement with the IRS that lets you settle your full tax debt for less than the full amount you owe. It's a legitimate option if paying your full tax debt in full would create a financial hardship. However, this isn't a quick fix for everyone. If you cannot afford to pay your tax debt in full or do a payment plan, the IRS generally won't accept an offer in compromise. In fact, the IRS usually approves an offer in compromise when the amount you propose is the most they can expect to collect within a reasonable time frame. Historically, only about 25 to 30% of the offer in compromise requests were really accepted, though in recent years the acceptance rate has really risen to roughly 34%. The bottom line is, it's possible to settle for less, but you must meet strict criteria to present your case very clearly. Before you invest time in an offer in compromise, make sure you meet the basic qualifications. The IRS provides an online pre-qualifier, and it's a tool to help you determine if you might be eligible. In general, you can apply for an offer in compromise only if, number one, you filed all of the required tax return documents. You need to be up to date on filing your federal tax returns and have made any required estimated tax payments if you're self-employed for the current year. If you're currently in an open bankruptcy proceeding, you're not eligible for an offer in compromise. If you own a business with or without employees, you need to have made all the required federal ES payments and or payroll tax deposits for the current quarter and the past 2 quarters before you apply. If you're applying to settle taxes for the current year and haven't filed that return yet, you must have a valid extension on file with the IRS. These IRS requirements are basically a way of the IRS saying, get into compliance first. The IRS won't consider a compromise if you're still delinquent on filings or other obligations. Also keep in mind that if you can actually pay your debt, whether outright or through a payment plan, you'll likely be denied an offer in compromise in most cases. This program is aimed at people who truly cannot pay their full tax liability. If you meet the eligibility criteria, the next step is to prepare and submit your offer in compromise application. It's important to fill out all forms correctly and include the required fees and payments. Your OIC application package must include a collection information statement, also known as a Form 433A OIC for individuals or Form 433B OIC for businesses, along with all required documentation like proof of income, expenses, assets, etc. This gives the IRS a detailed picture of your financial situation. An offer in compromise agreement is Form 656, which specifies the tax debts you're asking to compromise and the amount that you're willing or offering to pay. If you owe for both individual and business taxes, you need a separate Form 656 for each. A $205 non-refundable application fee, unless you qualify as low income, which we'll discuss later. An initial good faith payment towards your offer is also required. Now, this is non-refundable in most cases. If your offer is rejected, the IRS will apply this money to your tax debt. All of these items should be mailed together to the correct IRS address. The processing center address should be listed on Form 656B, Offer in Compromise, and in that book. So we make sure that everything is complete. If you leave out required information or forms, the IRS will return your application and refund your fee, and you'll have to start all over. It's worth double checking everything before you send it in. When you submit your offer, you must pick a payment option for how you'll pay that offer off. So if your offer in compromise has, say, the lump sum offer, let's say the offer amount you enclose is 20% of that offer with your application. For example, if you propose to settle a $20,000 tax debt for $5,000, you'll send in $1,000, which is 20% upfront. If the IRS accepts your offer, then you'll get a letter, and then you must pay the remaining balance, the other 80%, in 5 or fewer payments within a set time frame. Otherwise, you can offer to pay in installments and include the first monthly payment with your application. You then can continue making monthly payments on the offer amount while the IRS considers your offer. If the offer is accepted, You keep paying the monthly amount until the agreed amount is paid in full. If the IRS ultimately rejects the offer, any payments you sent in are applied to your tax debt. You still don't get them back, but at least your balance is reduced. But no matter which option you choose, remember that the money you send in with your offer application is generally non-refundable. The $205 fee and any payments that you make will be credited towards your tax debt if your offer is denied or returned. The only exception is if you qualify for the IRS's low income certification that I mentioned earlier. The IRS recognizes that some taxpayers can't even afford to pay upfront costs. If your income falls below certain levels, based on your family size and geographic area, you may qualify for low income certification. So what does that mean? If you meet the low income guidelines, you do not have to include the $205 application fee or any initial payment with your offer. Also, if you're filing a periodic payment offer, you won't need to make the monthly installment payments while the IRS is considering your offer. This is a helpful break for those most in need. Just be sure to fill out the income certification section in the Form 656 booklet to claim this waiver if you qualify. So what really happens after you submit your offer? After you've mailed in your offer and compromise application, the waiting game begins. The IRS will review your offer and make sure everything is in order. Here's what you can expect during the offer and compromise review process. The IRS checks that you're eligible and the application is complete. If something is missing, for example, you forgot a form or left out a signature, or you haven't filed all the required tax returns, the IRS will return your offer back to you without processing it. They'll also return your application fee, and any initial payment you sent in will be just applied to your tax balance. You can fix the issues and reapply, but it delays the process. If your offer passes the initial checks, then the IRS will send you a letter acknowledging that they received your offer and they're starting their evaluation. This letter may also give you an estimated date by which they'll contact you next and might request additional documentation to support your financial forms. Just make sure to respond promptly if they ask for more information. While the IRS is considering your offer, most other collections activities stop. By law, the IRS suspends any new levies, garnishments, or collections actions on the tax debts included in your offer. So this can provide some breathing room, like interest and penalties. However, they continue to accrue on your balance, just like normal, until everything's resolved. So don't be alarmed if you see a notice of federal tax lien filed during this time. The IRS might file a lien to secure its claim on your debt while the offer is pending. This is standard operating procedure to protect the government's interest. The lien will typically be released if your offer is accepted, and once you pay per the terms of your agreement, any payments or forms or fees you sent in with the offer while the offer is being reviewed are immediately applied to your outstanding tax liability. You can even specify which tax year or debts you want the payments to be paid for if you have a preference. Just note again, you won't get this money back if the offer is rejected. It's just going to reduce your tax bill. While you're waiting, stay current on the new tax filings and payments. For example, if a new tax year comes due, file on time and pay what you owe, or at least file estimated tax. Falling behind on current taxes while an offer and compromise is pending will cause your offer to be defaulted or returned. Essentially, show the IRS that you're committed to being compliant, paying on time, and being on time going forward. If you're already in an installment agreement and then submitted an offer and compromise, you don't have to continue making those installment payments while your offer is under review. Those payments are put on pause. Just be sure to resume or renegotiate the payment offer if the offer is rejected, so you don't fall into default on the installment plan. This is where the IRS clock pauses. Submitting an offer and compromise extends the statute of limitations on your tax debt. In other words, the legal period the IRS has to collect on you is put on hold while your offer is being considered. This just means that the IRS normally had, or if they had, 5 more years to collect. Your offer is under review for a full year. They still have that 5 years after their review is over. It prevents people from using an offer and compromise to just run out the clock on their collection statute. So here's an interesting rule. The IRS must make a decision on your offer and compromise within a 2-year time frame of the date it receives your offer application. If they don't either accept or reject your offer within that time, then by law, the offer is deemed accepted. That's pretty neat, huh? It's automatic. But delays due to any appeals that you file don't count towards that 2-year window. In practice, the IRS usually responds well before this deadline, but it's good to know you won't be left in limbo forever. The offer and compromise review process can take several months, even up to a year or more for complex cases, so patience is key. During this time, it's crucial to stick to the plan you proposed and promptly send any information to the IRS that they request. Remember, the IRS is re-evaluating whether your offer represents the reasonable collection potential, basically the most they can expect to get. They'll be verifying all the financial information you provided, so be honest and thorough. If your offer is accepted, congratulations. If you receive the news that the IRS has accepted your offer, you're well on your way to wiping out that tax debt for less than what you owed. But your work isn't done yet. You must strictly follow through with the terms of the agreement that you sent in to make it final. So here's what happens next if your offer is approved. First, complete the payment of the offer amount according to the terms that you chose, either lump sum or installments. For a lump sum offer, that means paying off the remaining 80% of the agreed number of payments. For a periodic offer, continue making the payments on schedule until the offer amount is fully paid. The IRS's acceptance letter will reiterate the amounts and due dates. Do not miss any of the payments. A single missed payment could default the entire agreement. And perhaps the most important consideration, you must stay in full tax compliance for 5 years after the offer is accepted. This means filing all tax returns on time and paying all taxes owed in full for the next 5 years, or for the rest of the current year plus 5 years effectively. If you default on the timing or any payment in that period, the IRS can revoke the compromise, reinstate the original tax debt, and add interest and penalties as if the offer was never accepted. In short, you're getting a fresh start, but you have to keep your end of the bargain by staying on track and going forward. If there were federal tax liens on your account or property, the IRS will release those liens once you've fully paid the agreed offer amount and met all the terms and conditions. They won't release liens immediately upon acceptance. They hold on to them until you've finished paying and the offer terms are satisfied. This is just to ensure that they have security until you complete the deal. Once everything is done, you'll receive documentation that the liens are lifted, clearing your record. Be aware that the details of an accepted offer and compromise are kept on file and can be requested by the public. The IRS is required to maintain a public inspection file of offer and compromises, which includes basic information about the agreement. So theoretically, someone could request to see the record of your offer and compromise. It's usually not an issue for most people, but it's good to know this real transparency exists. After you make your last payment and satisfy the terms, the IRS will send a written confirmation that you fulfilled the offer and compromise. You'll want to keep this for your tax records. Your tax debt is now considered settled in full and the agreed amount. So from here on, continue practicing good tax habits and avoid any future issues. But an accepted offer and compromise can feel like a huge relief. It's like the light at the end of a long tunnel of tax debt. Just remember that it comes with responsibility. Think of it as a second chance. The IRS has agreed to let you off the hook for part of what you owe. And in return, you've promised to be a model taxpayer going forward. If you uphold that, you'll retain the benefit of the compromise and can truly put that old tax debt behind. Isn't that a relief? But not every offer will be accepted. If the IRS rejects your offer, don't panic. Do have options and you can keep fighting. Or you may consider alternative solutions. Here's what to do if you get an offer rejection letter. The IRS will typically inform you why your offer was rejected. If it might be that they believe that you can actually pay more based on your financials, i.e. your offer was below what they call reasonable collection potential is, or perhaps you failed to include something important in your documentation. Read the letter carefully so that you know the cause. Sometimes the IRS might simply request a higher amount to consider accepting your offer. If you disagree with the rejection, you have the right to appeal, but you need to act quickly. You have 30 days from the date on the rejection letter to file an appeal. To appeal, you'll submit Form 13711, Request for an Appeal, Offer and Compromise. In your appeal, you can provide additional information or explain exactly why you believe your offer was fair. Your case will then be reviewed by the IRS Independent Office of Appeals, which is a separate department from collections that can either uphold or overturn the initial decision. This gives you a second chance at consideration, often with a fresh set of eyes on your financial situation. If you decide not to appeal, or if an appeal doesn't go your way, you might consider to submit a new offer later. You can adjust the amount you're offering or wait until your financial circumstances change. Just ensure that any new offer addresses the reasons the first one was rejected. For example, if the IRS thought you could pay more, a higher offer or additional proof of expenses might be necessary. If your OIC application doesn't go through, remember that an OIC is just one tool, tax debt relief. If you ultimately cannot get an OIC approved, you should look at other solutions. The IRS might allow a payment plan on your whole installment agreement to pay over the whole amount over time, or they might consider you currently not collectible. If you truly cannot pay anything right now, which would pause enforcement until your situation improves. Bankruptcy is the last resort option for older tax debts. The key is to communicate with the IRS and not give up. There's usually some arrangement that can prevent harsh collections actions, even if it's not an offer in compromise. Remember, a rejected offer isn't the end of the road. It just means you might need to try a different approach. The IRS would work out some way, they'd rather work out some way for you to pay what you can than force you into an impossible situation. So if your offer in compromise is rejected, pivot to the next best possible solution in resolving your tax debt. An offer in compromise can be an excellent solution for taxpayers in genuine financial distress, allowing you to settle your tax debt for less than what you actually owe and get a fresh start. It's a detailed process that requires honesty, documentation, and patience. But the end result truly be worth it if you cannot pay your full tax bill. Always ensure you've explored other payment options first and that you meet the qualifications before applying. The common sense approach here is don't overcomplicate things. Submit a reasonable offer based on what you can actually pay, back it up with facts, and stay compliant going forward. And that's how an offer works. If you think you might be in over your head on this, you can always seek advice from a qualified tax professional. Just make sure that they're reputable, because unfortunately, there are scammers out there promising the pennies on the dollar outcome for anybody that'll pay their bill. Check their qualifications of anyone offering to help you set up an offer in compromise. In the end, an offer in compromise program is all about compromise and fair resolution. The IRS gets something out of it rather than nothing, and you get a manageable path out of tax debt. Good luck, and remember, if you stay proactive and transparent with the IRS, you're already on the right track. An offer in compromise is not guaranteed, but it just might provide the relief you need to put your tax troubles behind you and help you move forward with peace of mind.